it's kind of, I feel like whatever we do doesn't matter much because the market could gap up, right? Or gap down. But Nvidia, we had a beautiful bearish pin bar that I talked about. I think it was on Monday. Anybody catch that? Even if you didn't get in, did you catch it? Did you learn from it? You're not always gonna make money, but are you learning? Anyone? You caught it?
Saw the notification in the Discord, and yeah, always learning.
Yeah. Beautiful level. It acted like it was going up. And then there was double confirmation, right? It was actually triple confirmation. Can anybody tell me what the triple confirmation could be on the downside here? Anyone? Bearish.
The bullish pin
Well,
bar
the
failed.
pin bar.
Okay, that's one.
It felt in support. I mean, resistance up there.
It
Mm.
broke the bearish pin bar.
The fair bull is that a fair bullish pin bar?
Yep.
Yep, that's the one.
That's two. That's actually so resistance is one. You guys got it. The bearish pin bar is two. The failed bullish pin bar is
That's
three.
three. Yep.
Okay, what is four? What else do we have that gives us bearish
Yeah,
price?
engulfing
That's
bearish.
enough. Yep.
Yep,
Mm-hmm.
yep. So right here, this guy, right? So there was way too many confluence on the downside, right? We swung up to resistance. We got a bearish pin bar at resistance with prior, right, levels here where the market got pushed down. Market got pushed down here. So it's a significant level. And then we had that inside bar, failed pin bar, inside bar, right? So this pin bar right here had a baby, right? And then this bearish engulfing bar took up the high and the low. So the moment this closed, this candle here started to go below the bullish inside bar candle, that could have been your second entry. First entry could have been right here. This right here. When this first candle closed, right? This candle. But it looked like you would have been down. It doesn't look like you would have been down. You would have been down because I was in and I was down. So I know. And I was like, wait a second. Because I don't like puts, I actually second guessed myself. I was like, wait, am I looking at this properly? I'm like, nah, this shit is still bearish, right? And the fact that it's Nvidia, sometimes you feel like it's just gonna go up. I'm like, I don't care if it's Nvidia or it's whatever. Trade what you see, right? And so what I do for myself, because I'm low-key retarded a little bit when it comes to puts, I just invert it to see if it looks like a call, right? And this allows me to be like, okay, until it goes below this candle, it is a call, right? Technically.
Yeah, you should bring out the box a little bit more.
What'd you say?
I was
Whoever,
saying you can say break out the box a little bit more too when you invert it.
when you invert it. Is that what you said? Who's
Ooh.
that?
Yes, sirski.
So when you're not sure or you second guessing yourself, just invert it. It's just you're looking at the same thing, the mirror image of whatever you look at. It's flipped. You know. So I was like, okay, bet. So here, I mean, it's a put, but here we bounce from here, we bounce from here, we are back here, and we have this rejection. Like, man, this is simple, man. Stop loss is here. So long as it doesn't come below here as a put, right? Put it back. There you have it. We got the same thing on Netflix. Netflix, I want to get in a call, but it's just not ready. So Netflix, I forgot what time frame it was here. This was another beautiful one, right? Textbook, pin bar, with the trend, no question, you can't fight it, right? Very simple. Right on the trend line, right? Stevie Wonder could see this. You see what I'm saying? You see what I'm saying? You hear what I'm saying? Stevie Wonder. Anyway, you see it, right? So over here, what confirmation did we have? Would anybody be buying NVIDIA calls from here? Would there be any justification to buy NVIDIA calls from January 13th to here? Is there any justification? Is there any course, any reason for anybody to fail on this chart? Now let me buy a call.
I ain't gonna lie. If you don't draw it out, it will make you feel like you can buy, chase a pinball sometimes, but
a what? A bullish pin bar?
a bullish pinball.
What bullish pin bar do you see from the blue line towards the right?
Every time it gap down. But if you don't draw it out though, you wouldn't see it.
You know what I'm saying? There's no bullishness. Listen, I've been trying to get into a Netflix call and I just couldn't find it, right? And I'm the bullish guy. All I've trained my eyes to see is bullish setup. I couldn't, it just wasn't there, right? I wanted to see it, but I couldn't see it because it wasn't there, right? And this is why they say the trend is your friend, right? Don't fight it. This is very clean. You see the highs are getting low. And they're getting low with pin bars, right? They're getting low with pin bars, right? They're getting low with pin bars. So when you seen this pin bar here, tell me, was there any struggle, any fear, any uncertainty? Yes, you can still fail, right? Yes, you can still fail. This is 4 hours. Yes, you can still fail. Why can it still fail? Can anyone tell me why everything can look good, but it can still fail?
Because it haven't broke trend yet.
Okay, what if it broke the trend?
News.
Can it still fail?
Yes, it can still fail.
Why can it still fail?
Because the market is very news driven too. So
Okay, and what else? Why can it still fail? Can you have the perfect pin bar with the trend, well-defined textbook? Can it still fail?
Yeah, it could still fail because the market unpredictable. And sometimes, no matter how good your setup is and how much confluence you have, it can still go the other way.
Yep.
The market doesn't give a shit about how perfect your setup looks
Right.
because anything can happen, right? One tweet, or even without a tweet, it can still fail. It can still decide to go up, right?
What? Yeah.
So that is why you never see this, right? Let's say you have a $10,000 account or $5,000 account, and typically you trade in $500 per contract. You don't want to see this and say, yo, this is what Block has been talking about, man. It's a pin bar, the trend, everything is checked. I'm about to put 4,500.
Go all in.
Right? Don't do it. In this case, it would have worked. You probably would have turned that 4,500 to 20 racks, right? And this particular one would have worked. But if you keep doing it, one day you will lose it all. How do I know? I did it. Everything I'm telling you because I did it, right? And when it works for you once, you're not gonna listen to nobody. You're gonna be like, man, fuck all that, man. I'm sitting on 30 racks. You know what you're gonna do? You're gonna put 30 racks on the next perfect setup.
Shut up.
You know, and that might take you to 100, right? So now you feel like, oh, I figured the market out. I know what's gonna happen next. But you know what's worse? It's worse losing going up to 100K and coming back down to zero than losing your 4K, right? The 4K is closer to the ground than 100K. The way your emotions and your self-worth is gonna be fucked up, you better off not getting there and losing it. Okay, so no matter how good it looks, still do the right thing. You know, use proper risk management, proper position sizing. So yes, in this case, you will still measure, right? You will still measure. This is what you do, right? You know where your stop loss is going to be. You're going short. You're going to be like this. I'm entering here. If Netflix breaks out and it closes above here, I'm getting out. But not only am I getting out, I'm getting out to get into a call. Why would I get out to get into a call? Come on, this should be simple.
It's reversing. Trend change.
Why? Where's the confirmation?
Got a resistance up there at
where's the
82.50.
82.50.
You got a line up there.
Right here?
Nah, 82.50. Well, you got the black line at.
No. I'm saying when it breaks above here, where the stop loss. So you see where the red box ends?
Yeah.
Right here. So if it was to break and close above here, I personally will be going long. And I wouldn't be chasing. It wouldn't be because I lost this trade. Why would I personally go into calls?
It's a failed pin bar.
That's a failed pin bar, right? That is a failed pin bar. So someone else might be like, no, I don't see it, right? It can still come down. But if your system tells you that a well-defined pin bar, 90% of the time, it works. And when it fails, it works in the opposite direction. That is just what the data shows, right? I can't explain it. I'm not going to speculate whether there's liquidity or what institutions are doing. I don't know shit about what institutions are doing. All I know is 9 out of 10 times, if it's well defined, if it forms in the right place, resistance, a strong trend, and it fails, it will go the opposite direction. So this one here worked. With the trend, you would have made money, right? So if you had seen this and then you did a put and you measured your risk reward, you would have made money down here, right? This second one, you still would have made money. But this second one, did it fail? This second one here, did it fail?
Nah, it ain't fair because no candle really closed above the top of the wick.
Good job. Good job. Why you be wanting to do a one-on-one? I'll take the money. Is this Marley?
Yeah, that's Marley.
Man,
Yeah,
you don't
because
need no one-on-one, man. I'll take the money if you just want to give me the money. Because I mean, you answering all
It's free.
I'm low-key retarded. Who even does that? Somebody trying to pay you, you like, no, don't pay me.
No, that's real, bro. That's come on, man.
I appreciate it, but a lot of times,
You answering the questions. You don't need any extra. I mean, I'll take it and buy sats. Like I need sats. You understand? Like we've done one-on-ones like how many times? Like a few times, right? Like I promise you, you don't need it. you don't need it.
Appreciate it.
You understand what you're doing. You see it, you explain it. It did not close, right? So this wouldn't warrant, okay, the pin bar failed. No, it didn't work out, but it confirmed with another pin bar. Somebody said you're reading the hell out of the chart. That's what I'm saying. And then he tries to do one-on-one. Like, bro, go buy sats, man. Well, give me the money. Hey, Marley, forget about everything I said.
Get that.
All right.
Wait a second. What are you doing?
Get that. That's crazy.
What are you doing? Yeah, but so it's you with the trend. The trend is the market is making higher lows and lower lows. Definition of what a downward trending market is, right? The lows are getting lower, the highs are getting lower. So there's no reason for you to, okay, let me give you an example of a failed one, right? So we're going to look at a failed one. This is a pin bar, right? It worked, but it didn't work the way it's supposed to work, right? It worked. So if you a scalper, you made money. This is also a pin bar. So this is a bearish pin bar. If you played this using your risk reward, I'm telling you, if you guys study this thing, you don't need any other strategy. And all of you guys in different discords and shit, I'm telling you, you're wasting your time. It's simple. This is easy. It's clean, right? Look, could have done a put here on this pin bar. You know exactly where your stop loss is. It would have worked. Look, did you get a 2-to-1 risk reward? Absolutely. The 2-to-1 risk reward would have hit boom with another pin bar. But look, this pin bar, I wouldn't even say it failed, right? Because it technically it worked. You made money. The only thing is it did not give you a 2-to-1 risk reward. So look at this pin bar, right? And this wouldn't be a smart pin bar. Okay, let me scratch that. Would you play this pin bar? This is pin bar A. Let me put this, right? It's not a right or wrong. I mean, either way, it's
Like the pin bar for a call or for a put.
for a call. So this is pin bar A, right? Would you buy a call based on this? And be honest. Don't tell me what I want to hear.
No, the body is small, so I probably
Nah,
would
yeah, it don't have
overlook it.
enough body.
Break it down.
But to me, it doubled though. I would have bought just because it doubled.
Would you have made money?
No, not really
Why?
though.
Why wouldn't you make money? Yeah, you would have made money. Why wouldn't you make money? It didn't.
I
It
mean,
worked.
it worked if you was quick though. But I was
Yeah.
trying. I'm trying to get in for long.
That
For
shit,
Why,
4 hours, you definitely made money.
why would you be quick? This is 4 hours.
That's 4 hours. That's like
This,
All right, my
got
this
bad.
is like how many
12
days?
hours green. Price action.
This is from December 22nd, 23rd
Yeah.
until
That's like
December 29th. You didn't have to be quick.
if you got a weekly, that's like 200% or better.
Yeah,
Yeah.
you definitely would have made money, right? So look, so based on the pin itself, you would have gotten in here. And the pin bar is also an inside bar. Is it an inside bar? Do you see? So it's also an inside bar. How many babies does it have or did it have?
But not only that though, like look at that how long that wick is. Even before that, that's a pin bar too on the low, right? The red one. To the left. No, not this one. To the right. The little small arm pin bar.
Like the one
Right there.
between
Before the green
two left,
bar.
three
Yeah,
left.
This one?
right
That
here.
one.
That's a little pin bar too, isn't it?
Yeah. I mean, technically it is.
I'm looking at the wick, the bottom wick to the top wick. You know what I'm saying?
Yeah, but this one, if you were playing the candle itself, you would have lost money on that.
Okay.
Right? Because if you playing the candle itself, then your stop loss is underneath.
It's underneath
right.
The bottom.
So that means this leg down would have kicked you out right here.
If you shook you out, yep.
You would have lost here. And on the upside of the you just would have lost because at some point this candle here was bearish, right? It closed below this on a lower time frame. So if you go and look at this on, let's say, a 15-minute or 5-minute or 10-minute, it was going down, right? And then it rejected. So you got whipsawed. But if you play, so the thing with pin bars, right? You want a pin bar that sticks out like a sore thumb. Anybody had a sore thumb before? Like literally? literally, it needs to stick out, right? Like a thumb that's been, they put Band-Aid on and it's swollen, it will have to stick out. It doesn't have to look like the rest of the price action, right? So every well-defined pin bar will stick out of the price around it, right? And the longer the wick, the stronger the move. So this legit, yes, it was a pin bar that would have made money. That is, it's not high vibrational, right? You still would have made money. Easy would have made money. If you entered right here, if you entered at the break here, you would have made money. But if you were expecting more, you will have lost the money, right? So if that's pin bar A and this is pin bar B, which is the bearish one, which one is high vibrational? Which one is the better setup?
B, right? Because it's kind of trending down.
Exactly, right? NB was also an inside bar combo, right? So it's a pin bar with a baby, which means you would have gotten out, you would have gotten in on the break, the bottom of that mother candle. When this closed, you would have gotten in here, right? Which means at some point you were down, right? Because when you got in, price started to go up, right? Price started to go up a little bit. But your stop loss is somewhere here. And you bought time. So long as price doesn't, okay, another gem. The rule about pin bar, I've explained this before. Who remembers the 50% retracement rule of a well-defined pin bar? Anyone?
Yeah, it's 50%, 65%. Normally it bounce right off the 50% and they keep going up. Or if it's going down, it's reject right off the 50%, keep going down.
Okay. So with that said, if this is the pin bar, this red one, did the second inside bar go up about 50% of that candle? This candle is a pin bar. The green candle, did it go up and hit 50% of that candle? Yes? No?
Yep.
So that 50% is also an entry, right? But that is for degenerates. That is for people who are like, because ideally, I want to get in when it breaks, right? I want to get in either here or here. But there's a legit strategy to get in here or here. Because when you get in here or here or here, guess what? Your stop loss is tighter, right? Than me. So if I'm getting in from here, my stop loss is
way up there.
right here, right? This is my stop loss. The person who's getting in here, their stop loss is at the same level as my stop loss. Because if price goes up and closes above the pin, you're going to lose anyway, right? But the person who got in here, their stop loss is this. So they saving 50%. You get it?
Yeah, the risk is a lot low.
Yep.
Mm-hmm.
So in this case, this trade, right? Look at the bullish one. The bullish one, yes, let's say you would have made money. The max money you would have made was from here to here. But the bearish one, if you kept it, look at the risk reward, right? That is what we mean by the trend is your friend. So imagine you got in here and you had 10 contracts, right? We're going to keep it realistic. You had 10 contracts. And the moment it dropped to like here, let's say you sold 8 and you decided the 2 is your runners. You're going to leave it, right? Your stop loss is still where it was going to be anyway. Now, look at the risk reward, right? That is a 12-to-1 risk reward because you traded with the trend and not against the trend. When you're going against the trend, you limiting. Yes, you can still make money, but you have to be right.
Gotta fight.
You know what I mean? Like everything has to be like, if you get busy at work or something happens and you forget something, you cooked. You're gonna come back and be like, damn, it worked, but I was busy and this person did this and I forgot to sell it. But the trend, if you trading with the trend, you leave a runner, let the runner do what the runner is designed to do. And in this case, that 20% that you left to run would have made you probably 3x more than the 80% that you took off the table. You see that? Simply because you played with the trend. So always remember, the trend is your friend. With this setup, every time you played the trend, you would have made crazy returns, right? On the pin bar themselves. So you got to ask yourself, at what point would you have failed? You wouldn't have failed. Also, there's a bearish engulfing here, right? This is a bearish engulfing. Forget about the pin bar. This is a bearish engulfing. So with the trend, the bearish engulfing will also have made you money, right? It's still with the trend. So bearish engulfing, you would have gotten in at the break when that candle, whichever candle closed below that bearish engulfing bar right here. Your stop loss is at the top of the bearish engulfing. Look, easy money, all because you're going with the trend. And if we flip this, it will be the same logic if you were bullish, right? If you playing a setup and it's doing this, you don't want to be buying puts, right? The trend is your friend, which means if it pulls back and it respects your level, you going with the trend. So you wouldn't be playing this, right? You wouldn't be shorting this. You will be buying these, right? You will be buying on the pullback, on the way up, on the pullback, on the way up, right? On the way up. Does that make sense?
Yep.
So it's the same thing. Whatever works on one side is the same logic. But the most important thing is you have to be able to know how to identify the trend. Because without identifying the trend, you wouldn't know which side to play it, right? So that's the most important thing. Identify what the market is doing. Is it trending up? Is it trending down? Is it moving sideways? That's the most important thing you want to establish. And once you establish that, then you know which side you want to be on. You want to be on the quality side, the side that is going to give you a higher reward to risk, right? You don't want to be short in this. You want to be buying on pullbacks. You know what I'm saying? So pin bars, they are the best, right? You can trade them anywhere on any chart, right? But it has to be from a event area, demand zone, supply zone. You know what I mean? They're all over the place. The most effective setup ever, right? See? Let me invert my stuff. See? Boom, boom, boom. Then it sets up for you right here. Okay. Enter stop loss, 1-to-1 risk reward, 2-to-1 risk reward, you out.
That's a fail to what term?
What'd you say?
No, I know the strat. They told me that's a fell two up. Candle fell to close up there and then just come down.
Oh, that's a strat, folks.
Mm-hmm.
Yeah,
Fell twos.
it's the same. It's the same thing, right?
Yep.
So if you understand the inside bars, people they be killing me, man.
Hey man, they make money off that shit. So not
Telling you, if you don't know, you're gonna be like, "Oh, this is the
that's
same
no. It's the same shit.
same thing." They give a different name. People just be finding different ways to say the same shit,
Yeah.
and they swear they discovered fire. It's the same shit. So like right here, you see a pin bar here. So when I enter this pin bar, so long as it's very simple, right? So long as the market doesn't come and hit below here, this doesn't matter to me, right? I'm still good. But you're going to be down depending on your expiration, your contract. Probably going to be down 10%. You're going to be like, oh, did I make a mistake? No, you only going to fail or lose when it comes down here, when it kicks you out. And if it kicks me out here, I'm going short anyway. So 9 out of 10 times, if I lost $100 here, I will make my 100 back, which makes it a break-even trade. And I'm okay with that because I didn't lose money, right? So when it fails and you flip, you're not flipping to make a profit. You flipping to make your money back. You know what I mean? So another thing I want you to see, right? Where the pin bar forms, right? It's very important, right? So if you're looking at it like this, okay, so the market printed a pin bar here and it shot up, right? This was what level is this? What do you call this level here? Right here. What zone is this?
Support.
Okay. So support, right? It bounced off support. Okay. And then the support turned to what over here?
Resistant.
Yep. Okay. So when the market went down and it came back here, this is still resistance, right?
Yep.
Okay. At this resistance, what is this candle here that I'm pointing at?
That's the inside bar.
Is it?
Yeah.
Yeah, but I'm talking about this one.
Okay.
Is it a bearish engulfing?
Nah.
bearish engulfing, right?
Is
And
it?
yes.
I didn't want to say that.
And where do you want to act on bearish engulfing? Resistance, right?
Yeah, resistance.
Okay. So are we at resistance?
Yeah. Mm-hmm.
And then we have a bearish engulfing, right?
Yeah.
So we have a bearish engulfing. And like he said, it's also an inside bar at resistance. So where will be your entry? What would you be looking for here? Would you be looking for a call or a put? Likely which one?
Put.
I mean, either way. I mean, if it breaks the inside bar to the upside, I probably do calls, but obviously broke it to the downside, do puts. Because
Okay.
inside bar, you don't really know which way it's gonna go.
Right. So it's an inside bar, but because you had the bearish engulfing, it kind of gives you
A bias, like right.
exactly a bias, a hint, like
Mm-hmm.
there's a bearish engulfing at a swing high. Because at the swing high, for you to go up, you should be seeing a pin bar, right? A bullish engulfing, you want to see momentum on the upside here. But the moment you start to see the green candle kind of like getting smaller, it's almost like a doji candle, and then followed by the bearish engulfing at that same level where the pin bar shut up prior, right? So it's a significant level. So the way you can play it is, of course, it gapped down, right? But from here to maybe here, you would have made some money. Then it would have came up. But when it did come up to that same level, this is your second chance. What did you do?
It's a pin bar right there.
Right there, right? So now it's giving you a second chance at that level, basically telling you, bro, we were trying. We ain't going up. They telling us
so keep pushing it down. Yeah.
You know, so let's say you want to try it, right? Let's say you like, man, I don't know. I think it wants to go up. It's very simple. Your stop loss, this makes it very easy for you, right? Your stop loss is so tight. You can say, okay, I'm putting $200. Let's say you like, okay, I'm not sure. I mean, it's a pin bar, but it looks like the Bulls wants to put it. Okay, cool. This is what you do. Look at your stop. Your stop is really tight. I see this. I'm going to put, if it comes up above 115, I'm wrong. Right? There's nothing to fear. I think I think Friday Norbert mentioned that, like, there's no threat. So long as the amount of money you put in on the line makes sense. If it's $100, $200, your stop loss is very well defined. You know exactly where you're gonna be wrong at, then that's it. You put in the trade, you enter, you go about your business. By the time you turn around the next day or whatever, you had printed money. If you left it, you made even more money, right? So the levels like really matter. The levels matter. And then look, then you got another pin bar, inside bar, right? And you will see this not just on Netflix, you will see it everywhere. Break, go down, make money. Even this guy, this doji here made money. This guy made money. This guy made money, right? They all making money. This guy made money, right? All making money. So think about it. You don't have to trade multiple 250 stocks. Netflix alone, right? Netflix alone. Just look at it, right? We've had Nvidia, Apple, blah, blah, blah. But Netflix alone from September, or let's say October to now, you could have traded Netflix alone and made more money than everything else combined. Same with Microsoft, same with Google, same with Apple, and this is 4 hour. If we go to a lower time frame, we'll probably get more, right? Let's go lower time frame. Lower time frame. Large it. Oh, that's a beautiful. Yo, I'm telling you, it's there. It be in our faces, right? But the thing with having a setup is you don't know which one is gonna work and which one is not gonna work. So if you play in pin bars from like event zones, you have to play them all. You can't be like, oh, but this one is not gonna work because now you're doing too much. You're trying to talk yourself out of it because you want it to work. But trading is not about I want it to work. It's about I have a system. Do I see my edge? Is it present? Is my risk reward there? That's it. Get in. You'll make money, right? Could have played it. You could have even played the retarded ones, and basically it would have been difficult for you to not make money. Right? Would have been difficult for you to not make money. And that's just on Netflix. This is 15 minutes. We're no longer looking at 1 hour. 4 hours, right? It's 15 minutes. Okay, this is a pin bar example of a failed one, right? On the 15 minute. Failed pin bar. So let's say you bought it. You bought it here. You're like, okay, it's reversing for whatever reason, right? Like, okay, boom, I'm gonna buy it. My stop loss is here. This wouldn't have worked if you went short.
You know what I noticed too, Black? I feel like lower time and you get a lot of failed pin bar too, because it's a lower time frame.
Say that again.
I feel like when you like go down like the 5 to 15, you get a lot of failed.
Yeah.
You know what I'm saying?
Yeah. Yep. That's why the higher the time frame, the better it is, right? It's less noise.
Right.
So I'll rather a pin bar from a 4 hour at lowest, I'll say 1 hour.
Right.
But the higher the time frame, the better. If it's daily, that's even better. If it's weekly, more better, right? More better. So
More better.
I don't even know if that's it. I said it, shit.
We get it.
more better, shit, whatever. So let's go on SPY, right? The SPY 2 weeks when the Trump shit happened, I made a lot of money on this, right? So you will see it. It was so clean. You see it here? You see SPY, inside bar, pin bar, pullback. You see here?
It was beauty though, man.
You see that?
Yep.
So right here. You got in? Look at all this money. We bought 700s. This joint was here. We bought 700s when it was here. Them contracts were cheap as shit. January and February expiration, 700 calls right here on that pullback, right? Look at it. But also you will see here, there's another good example here, right? You will see this. So this was also a nice pin bar, which worked. But it worked, but it didn't work the way it's designed to work, if that makes sense. It worked. You would have made money if you played this, but eventually the market broke below the pin, right? Do you see that?
Yep.
Right here. So this is when you know, even me, I will go puts, even though I don't like puts, because this pin bar has failed. And the fact that it failed, look at what happened.
But let's say if you take a setup on the 2 week, right? How far you go though? Like 2-3 weeks out?
Oh, on the two, so if I'm taking
the trigger right here, right?
Okay, so I can go back because you know this is SPY and it doesn't usually pull back this much. This was near bear market territories. It actually entered a bear market, but it was only after hours. Because I remember I was watching it. It technically dropped 20%, but it did not close 20%. Does that make sense?
Right.
So after hours, it came down all the way here. But when the market opened, they pushed it back to here. Then it dropped again after hours. It was at 17% down. Then they pushed it here. So to answer your question, what I will do is I'll go look at the previous drop like that, right? This drop. So let's measure this drop. Let's see how much of a drop that was. So let's say from here to here, right? It dropped about 22% to here. Now you got to ask yourself, how much money do you want to make? So if previously it dropped like that, and okay, let's even go further because there's so many more examples, right? Over here, this is the COVID drop. So COVID drop, it was here, it dropped 30%, 29%, 28%, right? Okay, let's go even further back. November 2018 drop. 2018 drop, it dropped 18%. Okay, so why am I checking all of this? If you want to know how far your contract should be, what would you do? You're gonna measure how long it took to make a high from that
recover,
drop, right?
Mhm.
So from here to here was 413 days. Okay, before it dropped again. So that is a leap, clearly. But you don't have to do a leap. But if you want to really maximize the move, you know that you got to give yourself about 6, 8, 12 months, right? Okay. From COVID to the peak before it dropped, this is what we have. From here, it had dropped 28%. And it went all the way. How many days?
Damn.
Right?
That's 644 days.
So that's damn near shit. What?
Over 2 years.
No, that's less, right? 1 year's 3
5, a little under 2 years, yeah.
Yeah. So, but anywhere here, you would have made money regardless from here to here. So 2 weeks, I mean, 2 weeks, even 2 weeks, you would have made money. 1 month, you would have made money. 2 months, you would have made money, right? But as you can see, if you left it, you will be eating. If you had runners or whatever. Okay, now let's go to here, 2022. When it dropped, how long did it take to go back up? It dropped 22% and it run up how many days to the top? 834 days. So if you caught it somewhere here at the bottom, do you want to buy 2 weeks expiration and leave it alone? Or do you want to milk this shit until
So the cow come home.
exactly? So now the most recent low, we came down here. Let's see how long it has been. Because based on what we are looking at, the shortest time was 413 days, right? So from here to here, where are we at? We are 300. Can we go higher? Absolutely. We can go higher. Then eventually we drop, right? So let's say we go higher, right? I'm just saying this could be where it drops a little bit, but it doesn't feel like it based on history, right? Because when it drops, it goes up much higher. Then it drops. So we're getting 400 days, 600 days, 800 days. So let's say we get somewhere here. Let's say we go to 800, right? I'm just saying.
I mean, not only that though, I feel like when it drops, you get these red candles back to back to back.
Yep, that too. Right. So if we were to like go to 8 something and you get a pullback, because you have to understand this is the stock market, and it's manufactured. It's not real. Like everything here is inflated, everything here is manipulated, everything here is manufactured. It is not true, right? So when it comes down, it's designed to go back up. They're gonna make it go back up no matter what. You see what I'm saying? So you could make a lot of money just knowing that this is manipulated. There's no way the US government is going to watch the S&P 500 drop for more than whatever duration it usually drops for. So when we go up, not if, when we go up, let's say we go up to right here, to 900, and it drops, let's say 25% back to where we are. This is where lives get changed, right? Because you know that they're gonna put, this shit is forever gonna go up. Not because amazing things are happening. It's because they are,
that shit designed to go up.
it's designed to go up. They will bail them up. All the companies can fail, right? Everything can go to shit. They will bail them up. They will print money. And there's a direct, clear correlation between the money printing and the S&P 500 going up. So the S&P 500, we think is going up because the companies are doing amazing, but realistically, what is happening is the M2 money supply is what is pushing it up. So if they print money, it's going to go up. It's designed to go up forever. So whenever you get a pullback like this, you know the next 10 years or whatever, this joint is going to go to 1,200.
They're going to hit 1,000.
It's just going to keep on going. Like this is going to keep on going forever and ever and ever. We will die and come back, and the joint is still going to be doing this. Pull back a little bit, then go.
Well, it's safe to say you could put a couple $100,000, like $1 million in that shit.
Absolutely. What?
Right.
Bro, when COVID, listen, when COVID happened, right? And the peasants, we were looking for hand sanitizers and toilet papers. It was here, right? Man, these people were rubbing their hands together like Birdman.
Yep.
because they know,
They
right?
know about it.
They're gonna let Microsoft what? They not going to, if all it takes is for them to print money. Because today I posted this video on Instagram, and the guy was saying this, and I knew this, but when you think about it, 80% of all the money that is circulating in the US was printed in 2020. Can you believe that?
Oh, I don't believe that.
80% of all the money.
It's all new money.
New money. That means they diluted all your energy, all your hard work, all the promotion, all the grocery. That's why everything is more expensive and we're getting less and less and less.
Yep.
You know what I mean? So whenever shit like this happens, they print money. They bail. So here is where you get fucking rich. Here is where you, listen, here you take a loan, you sell a kidney, whatever. That's what you do on the pullbacks. No pullback would ever make you poor. Just look at it. You can go back.
The design to go up. Like
it's designed. It pulls back and these people get fucking rich and rich and rich and rich. Look.
Every pullback, that shit
every
go high.
pullback getting fucking rich. Every pullback getting fucking rich. Here you might have fucked up a little bit over here. You shit in your pants here.
But eventually, if you didn't sell,
you know what I'm saying? Yeah, here you felt it. Here I ain't gonna lie. This is the 20. So okay.
What was that though?
It's the recession.
Okay.
Here you shit it. Yeah, you shit it yourself for a bit.
Feeling that.
You know what I'm saying? But even look at that, right? Look at the high. This was a high, right? This was a high. So long as you don't give up, right? So long as you don't give up, the highs become lows, right? Look at it.
Double top too.
Yep. So market caved, which means over here, okay, this was the top. It dropped down. This was when you were supposed to go stupid with it, right? Because the previous low, right? Look at the previous low. The previous low was 02. So when the 08 recession happened, it actually dipped below the
Especially with
02.
$78, bro.
Bro, that is what
God,
I don't know what the fuck. So at this point, you know what? Here, Bitcoin didn't even exist. So there was no Bitcoin,
$8, bro.
right? So the fact that it dropped lower than the previous low, it broke it and it rejected, right? It broke close and then it rejected. Bro, the amount of money that was made here, this is where the government was bailing out,
All the
ready.
banks, everybody.
Yeah, all of them, right? They bailed them out. So they know that even if like I go through recession or whatever, I'm about to get fucking rich if you understand this. So you should actually be praying for a recession and make sure you have money when this happens. And you know what makes it dope? When you put this together, right? When you do this and you go to the VIX, bro, game fucking changer, right? So if you look at it like this, you're looking on the 2 weeks, right? Like this. And then we're gonna go to the VIX. Then we're gonna go look at the same, bro. I didn't know this shit back then. When I think, I'm like, fuck. So what the fuck did I know? Right? You'll be walking around thinking you know shit, and then you look back and like, what the fuck did I even know?
Or wrong.
Meanwhile, people been knowing this shit and they've been cooking
Yeah, we late, bro.
good. I'm like, what the fuck was I even doing?
But why the 2 weeks time frame though, Black? Why not the monthly or the 3 weeks? I'm just asking.
It's
That
still
don't
the
matter, bro.
same, but I
Okay.
think that the 2 week made it very clear for me. I'll be looking for because I know nobody is looking at the 2 weeks.
No, and I'm just asking because I know you move different. So I'm like, all right, why 2 weeks then? That's cool.
Yeah. I mean, one week still did the same. Like it still showed you the same information.
Yeah.
Okay, so check this out, right? So we get in there. Oh yes. So look at this.
Good.
This is beautiful. So look, you see the VIX here? This is the same time, right? So the fact that SPY did this and the VIX did this, bro.
The fix was
Here,
not
you
fixed, bro.
as this is going up, right? As this is because the moment it clears 60, here is good to buy, right? Even here, if you buying and you losing, so on the S&P 500, it will be like buying here and it's going down, right? This is what it's gonna look. So let's say you're buying, SPY is dropping and you buying at 94 and it's dropping, you buying at 90, 82, you go, oh, like what the fuck about? Bro, it's reflecting here because you know that this fear is unsustainable, right? There's no way that it can stay up here for more than a month or two. You see what I'm saying? So when you combine them, it's like, oh shit. Because typically, look at where the VIX spikes, right? You see it here? Typically, it's spiking around 50, 48, right? So when you get the VIX here, 60, 70, sell everything. Yo, sell everything. Because and you know what's crazy? You can measure this shit too, right? And it gives you an idea of how far out you should go with your contracts. Because from here to here, from the peak of the VIX fear, Bro, look. So that means anywhere from 70 days, 90 days, 140 days, 100, 200, anywhere here you made stupid money. You see that? Anywhere here you made stupid money. Right? And another thing too. So look, so on the VIX, so if you look at the SPY, right, over here, when SPY hit this 2002 low, look at where the VIX was compared to the 08 one. That doesn't make sense. Look at it. Look at the difference. There's a divergence, right? Look, from here to here, even though the price action low was the same, the fear was incredibly higher. Am I making sense?
Yeah, I got it.
So the fear here, price action wise, the bottom, it was a double bottom. SPY was at 82, now it's at 82. But VIX peaked at 48. But in 08, the VIX went all the way to 96. Damn near double the fear. Bro, sell everything. If you see VIX at 70, 60, whatever you got, for that 2 weeks or 3 weeks, liquidate all you got because you change your life.
Gotta go all in.
All in, everything. Everything. Especially if you look at the price action and you realize that the support level is the same, but the fear is divergent, that is a no-brainer. That means I'm getting to buy the same thing here with, oh my goodness, come on. You see what I'm saying? Easy. Because in 02, when it peaked, again, you can measure it. When it peaked, look, measure your contracts. If you bought 80 days, you made money. 140, look, you made money. Leap, anything like that. It could have been anything. Apple, whatever, everything went down. So anything you bought, you made money. So long as you didn't keep it too tight, like I'm doing a same day or next week or 2 weeks. Buy some time, leave it alone, get rich. Nobody can stop you from not getting filthy rich. It gets to 47, 50, you're going to make stupid money if you can buy 3 months, 6 months, 8 months. But the least you should go is about 3 months. You don't want to be doing no 2 weeks. Even 2 weeks, you're going to make money. But if you want to guarantee yourself money, buy time. Right? And then look, ever since, then boom, March 2020, look at it again and then go look at the chart. It hit 85. So the whole time we're like, oh, toilet paper, what are we going to do? Vaccination. These people are liquidating shit over here and buying contracts deep in the money 6 months because they know that at no point has this shit stayed up for more than 30 days. It's impossible. It's impossible. You see it? Does this, then it crashes. That crashes money. That is the fear leaving. That is money getting printed on the way down. And look, it did it again. This was 2024. I remember this, right? And this was the Trump one. So this is all money. They do this shit to make money. And we be talking about 50-50 and politics and shit. Meanwhile, they manipulating this. So again, You set your alerts. My VIX, I have VIX alerts all over, right? VIX alert. Next time it gets here, you got to be going stupid. Because look, it creates pin bar. Ask yourself, why does the VIX keep creating pin bars? Right? Why are there so many pin bars? Because it cannot stay. It doesn't stay. It spikes, then it dies. It spikes, then it dies. Right? It doesn't stay up. It's like somebody whose shit doesn't work. They get excited for a little bit, think they're about to do something, and they're like, oh, fuck, can't get this shit up. You know what I mean? So that's basically what it is. Look, spikes, die, spikes, die, spike, die. So even if you buy and you are down, so long as you buy time, you make money. 1,000,000% of the time. You only lose if you doing same day expiration, same week expiration, 2-week expiration. If you buy 6 months, 4 months, 8 months on any of these top companies, guaranteed money. And this is going to happen again and again and again and again and again. All you have to do is to be ready, make sure you're preparing for this. This is why you don't want to spend all your money, right? You don't want all your capital to be tied up in trades. That's why I always say, spend about 30% of your capital. I've heard some people say, hey, go all in. You know what I'm saying? I use the options market as, you can't do that. You can't put everything you got. You can't put all your money in place. You got to have ammo on the side so that when stuff like this happens, when it spikes to 50, when it spikes to 35, you make money. And we already know the pin bar move, and VIX is the pin bar king.
Known for that.
Right?
Mm-hmm.
There's a pin bar king, so come on.
Just look at that one right there.
Look at that shit. See, if you see the VIX give you a pin bar, what do you think is going to happen? Just buy time. You're going to make money. Time and time and time again. Right? Time and time and time again. But even with the VIX, you don't even have to wait for, because with the VIX, when you wait for it to pin bar, technically you're late. Right? You don't want to wait for it to form a pin bar. You want to buy it when it's climbing, as a matter of fact. You see it going up, don't even look at price action. Just start buying contract. 6 months out.
Yeah.
Yeah, don't at that point, price action don't matter. You see the VIX hit 40, I'm buying.
40, grab some.
Yeah, I'm
You
just
grab some
buying. If
more.
it goes up, I'm buying. I'm not looking at, I don't care. I'm not even looking at strikes. I'm just buying. Because this is when this happened. This peaked right here, April 25th, right? Let's look at the first bottom here, June 25th. Think about it. April 25th, the peak. Let's not even go June. April 25th, it hit 60. April 28th, May 12th, it was at 17. Think about it. From here to here, it's all money. So even if you didn't know what you were doing, in April, when the fear was at the peak, and you just said, okay, I'm going to do 6 months expiration on NVIDIA, Meta, PayPal, whatever. Whatever. You don't know anything. You just said, buy. At the money and out the money. At the money, out the money. At the money, out the money. You had 20 grand. Boom, boom, boom. Man, you turned out 20 grand to probably 300 grand. With no price action. This doesn't require price action. The VIX is the the ultimate price action. So this year, you got to have money on the side waiting for one of these alerts to go off. And I think one of them went off recently. Let me see if I can find it.
No, which one? I have that shit on my phone.
Let me see. VIX alert went off. VIX, see. I think when it hit like 13 or something. VIX 20, because I had it low somewhere. Let's see. Anyway, any questions? Wait a second, it's 10 o'clock already? What the fuck?
You can buy a call on the VIX too, because you know it's not going to stay down for long.
Yeah, but I don't like the way it moves. It doesn't make too much money. I don't know. I don't know if it's worth it going directly with the VIX or grabbing a. Okay, so I think it was here. VIX at 15. Where is it?
I got a couple. I got one at 1331 went off, and I got 1179. These was your levels too, so I just put them in my chart.
Yeah.
I
Wait.
got 1331.
Where is it? Why can't I find it? VIX. Okay, so yeah, here. So, all right. So you see how at 1530, right?
I had that one there.
You see how like it hit here, then it bounced. It hit here, then it bounced. Hit here, then it bounced. So I was like, okay, 1530. Let's see. So you go to 1530. See what happens there, right? So it's not just on the upside, it's on the downside too, right? It's on the downside too. So you see it here, right here. 1530, what happened? Right here. Yep. You see how we come to this level? It is so simple. Look, come to this level. It won't stay here for too long. It won't stay down there for too long. So VIX up, SPY put it. VIX down. So this is what you want to be doing here. What do you want to be doing here?
You want to buy some puts?
Yep. What you want to be doing? You know that when it's hitting these levels. So again, you see I have 1350, right? If it comes down to 1350, if it comes down here to 1350, come on, man.
Yeah, we got 1350. Got 1179.
Yep. And you would think it's not gonna happen. One day you're just gonna be there, but you know what's funny? Sometimes you will plan all of this and it happens and you chicken out. You start second guessing. What if?
We not though, bro. We know too much now. Like, you know what I'm saying? Like,
you
I
think
know
you're
I'm not.
gonna go crazy?
Man, listen.
I'm just saying, man.
Saying these are confirmation though. Before we just, you know what I mean, everybody be talking about it, but the way you break it down though, like, you know what I'm saying, and we back test it.
Yep, man, it's a no-brainer.
That's what I'm saying.
Look, if it touches 8, I don't know who you gotta sell.
I got 8. Yeah, I got that too. I got 8.
Because look, when has it gone below this without, like, when?
You're gonna get a tweet. You're gonna get something. Somebody gonna say something.
Right? Look, when? That's the lowest point.
What's the 8?
All the way to 19. All the way to what? 1990.
I ain't gonna let it happen. You gonna get somebody gonna say something.
All the way to 1990. And this is so look at, you see my alerts? I need to put on some more.
Yeah, I need. I gotta do the same. Hold on.
Here, right? You got one here.
Fix.
Right? Definitely listen. You come down here. There's this one spot. Everybody's like, yeah, we going to the moon.
Yeah, right.
you start,
Listen,
okay, we gonna
listen, this
see.
goofy head now I'm down like freaking
Yeah,
fuck $1 million. Fuck with these dudes, man.
we gonna see if you're going to the moon.
We're not going to the moon.
We're gonna see.
Bad as hell, bro.
You know,
Fuck,
so
it's all good though.
these levels here, yeah,
It's all good.
the bust a move, man.
For sure. For sure.
Yep. Anyway, I'm tired, man. Shit, I didn't even know I was gonna be. I thought it was gonna be a short.
It's gonna be 1-2.
Yeah, but it's good information. I hope you learn. Anybody got any questions? What y'all doing tomorrow?
Screenshot this.
You got barbecue or something going on?
Oh, cute.
Ain't it a holiday? It's a holiday, right?
Don't like that.
President's Day. I'm like, God damn, the year just started, and we've had like 3 holidays already.
Yeah, work, man.
The fuck, we trying to make some money, man.
Where's Bone?
Damn. But yep. So